African Financial Summit. President Muhammadu Buhari appeals for concessional credit facilities to tackle liquidity constraints and boost recovery efforts. Nigeria Exchange Group launched the Stock Africa is Made Of campaign. Federal government put measures to tackle illicit financial flows. Plus, oil falls on concerns of Iranian supply return, inflation fears. This is Business Express on the network service of the NTA, and we are reaching you live from Abuja, Nigeria's capital. I am Benny Adams, your guide. Good to have you join us at this particular time. I will start by telling you that President Muhammadu Buhari has made a strong case for highly concessional credit facilities, grants, as well as technical assistance in support of ongoing institutional reforms and fiscal measures in Nigeria towards helping the country build back better and greener. Addressing Africa Financial Summit on Financial African Economies, the president said Nigeria and other African countries are presently facing liquidity constraints that are not only preventing effective response to the COVID-19 crisis, but also hindering any progress towards recovery. State House correspondent Adamu Sambo reports that the summit was held behind closed doors.
The Africa Financial Summit, attended by dozens of African and European leaders, was convened by the French leader Emmanuel Macron to discuss ways of giving a big boost in terms of financial support to African countries affected by economic crisis caused by the COVID-19 pandemic. Records show that sub-Saharan economies will need at least $425 billion of extra funding over the next 5 years. President Muhammadu Buhari described the initiative by the French government as welcoming, saying, however, that with many African countries experiencing debt distress, there is need for more sustainable and affordable financing solutions, including debt relief, restructuring, or even cancellation. Consequently, he requested that 20 to 30% of the new or unused special drawing rights of the IMF be on lent to low and middle income countries. The president also made a case for developed countries to extend financial support for green energy investment and recapitalization of the international financial institutions like Afrexim and the African Development Banks to enable them provide concessional credit facilities to vulnerable countries. African nations, he said, are committed to implementing comprehensive reforms needed to strengthen debt management and promote transparency and accountability both in the mobilization and use of domestic and external resources. Nigeria, in particular, President Buhari said, has put in place the Strategic Revenue Growth Initiative and therefore made a case for France and other developed countries to support efforts at curbing illicit financial flows as part of the overall domestic resource mobilization strategy. From Paris, France, Adamu Sambo.
Well, Minister of Finance, Budget and National Planning Zainab Ahmed says Nigeria has implemented significant measures to curb illicit financial flows and ensure asset recovery. The minister stated this at the International Conference on Illicit Financial Flows and Asset Recovery, which was held virtually. Ahmed described Nigeria as one of the most affected countries as far as illicit financial flow is concerned. She explained that Nigeria has demonstrated strong commitment to addressing illicit financial flows through participation in the Open Government Partnership and significant progress made in the extractive industry, adding that technology-enabled improvements in tax collection and compliance help deter tax crime and facilitate public trust. Other efforts are the mainstreaming of transparency and anti-corruption measures into economic policy making processes, which has significantly reduced crime. Meanwhile, the federal government says it is committed to the full implementation of the second National Action Plan as it leverages and incorporates the lessons, insights, and perspectives gained from implementing NAP1. Minister of State Budget and National Planning, Clem Agba, who made the position known, says the NAP2 is driven by the need to make a positive impact on the ordinary citizens by identifying the issues that restrict effective citizens' participation in government.
The IIM review of NAP1 found that Nigeria substantially implemented 3 out of 14 commitments in the action plan. In particular, Nigeria notably advanced commitments in the areas of open budget, ease of doing business, and reviewing open government laws. 9 commitments saw limited implementation. 2 of these were not started during the implementation period.
We must strive to outdo the best of yesterday. We have to keep devising ways to realize the demands of open government principles as leaders of this partnership here.
And now to the conversation of the day. Nigeria's inflation rate dropped for the first time in 2 years to stand at 18.12% in April. The National Bureau of Statistics, that's the NBS, disclosed this in its recent Consumer Price Index report. The April inflation rate indicated a drop of 0.05% compared to 18.17% recorded in March, and it was the slowest rate since September 2019. Joining me to talk more on the latest inflation figures is Professor Uche Owalike. He's a professor of capital market and president, Association of Capital Market Academics of Nigeria. Prof, you are welcome to Business Express.
Thank you, Benny. It's my pleasure.
Prof, 0.05%. That might be marginal, but it's quite marginal, but we've not had this since 2019, the first time in 21 months.
Since August 2019.
So is it a reason to celebrate? Is it Uhuru yet, or it's a process?
Well, maybe the second one.
Okay.
The process is it's not yet time to roll out the drums. It's not Uhuru yet, to borrow your words. While it may be remarkable in the sense that it's the first time since August 2019 when inflation rate stood at 11.02%. That was in August. And April this year, we are now getting 18.12. So I think it's remarkable. It's the first time we are having a decline. But as I mentioned earlier, the risks to inflation outlook, are still there. I would say for me, it was really a surprise in the sense that I wasn't expecting inflation rate to moderate until about September, that's allowing enough time for the government to deal with the real issues that are impacting inflation in this country, especially the issue of insecurity.
Okay. Now, before we come to that, those issues are there. You express surprise at this
yes.
little stabilization we're having. What could be responsible for this when the real issues are still there?
Yes, there's what is called the base effect. Okay, I've read a number of arguments on as to why the marginal drop in headline inflation. Some attributed it to the fasting period, in the month of April, that tended to, curtail demand. So of course, if demand for goods, so the possibility that of course food price will drop, is there. So some said it could be due to the fasting period, but I think that it has more to do with the methodology, the way inflation, the consumer price index is computed. It measures the rate of change from year to, from one year to the other. So that's why it's year on year. So if you look at the inflation rate in April of 2020, it was quite high. And when you're doing index measurement, the higher the base, the lower the rate of change. Okay, and particularly when you look at what the MBS uses, what we call the Las Vegas method. So that clearly brings it out. So that could have also accounted for the marginal drop we have seen. So until we see a sustainable drop, okay, in this rate, you can't say it's we are out of the woods yet.
Okay, while we look forward to this sustainable drop, which all of us wish for,
Yes.
what are these real issues that keep this inflation rate, or that has kept this inflation rate all this while to this time?
Legacy issues, they've been there, they've been, lingering, which was why I said I wasn't really looking at any significant drop till about September. If you noticed, the 2021 budget, projected that the inflation rate will come in at 11.9%, by the end of 2021, which now appears to be a tall order, as it were. So these rich issues have always been there. Insecurity has remained number one. If you notice, food inflation is really where the pressure is coming from. Food inflation is as high as 22.7. Okay, the moderation we saw, yes, was in food inflation, which dropped from 22.9 to 22.7. But the core inflation actually rose, from 12.6 to 12.7. So the pressure is on food. And if you disaggregate that figure, you will now find that in places like Kogi State, food inflation is highest in Kogi, is as high as over 30%. Okay, so what are the issues? Insecurity is, a major driver. Okay, it has stopped farmers from going to farms, so food production has been affected. The cost of transport is also there. The fact that we've had increase in pump price of fuel, increase in electricity tariffs, these are still factors exerting pressure, and these factors are
demand is still there.
Remember too that only recently the central bank tried to also adjust the exchange rate upwards, merged it with the I&E window rate, the FX rate. So exchange rate now is official rate is now 411 naira, and that is the rate at which fuel is being imported into this country.
No longer the 379, 378, 379.
Yeah. So what that means is that in the near term, in the coming weeks, we expect to see an increase in pump price of fuel. Okay, except the government again chooses to bear that cost. Okay,
for the subsidy.
Yes, by way of subsidy. So if you have increase in pump price of fuel, if you have increase in electricity tariff, okay, you have increase in the exchange rate or devaluation of the naira, as we have seen now. We can't escape, more inflationary pressure or higher inflationary trend in the months ahead.
Prof, that is an alarm being raised, though with facts on ground.
So
that is to say, the 0.05% we have now,
it's not going to
until those things are measures are taken care of.
Except the way we say it in economy, other factors remaining the same. These other factors remaining the same will be that number one, there will be no increase in pump price of fuel, there will be no increase in electricity tariff. The exchange rate will moderate, downward. So until we have these things in place, of course, inflation rate is not going to drop. Again, the issue of insecurity is still there, but I want to believe that the government, of course, is looking into it.
It's looking into it.
And, with time, the issue of insecurity will be addressed. And once it is addressed, I have no doubt that food output will increase. And once food output increases, food inflation drops. We can now have a comfort level. But anyhow you look at it, the inflation rate remains elevated at over 18% because the central bank has a target of maximum of 9%, between 6 and 9%. So anything that is double digit poses a lot of challenge for this economy.
Okay, talking about this elevation, double digits, and the threat it's got to the economy, we also see in the United States of America rising inflation in the last week. If that is happening to countries out there, what should we be more afraid of?
The interesting thing about US and some other developed countries, that is something they desire. In the US, for example, the Federal Reserve, desires an inflation rate that is high, that is up to its target rate. Its target rate is 2%. Inflation rate in the US is below 2%. And the Federal Reserve, that is the equivalent of the central bank, is working to see that inflation rate moves up. So that the economy can be stimulated. That is why they adopt measures like quantitative easing, trying to pump more money into the system to be able to stimulate the economy. And which is also why you have in the United States, their monetary policy rate equivalent is called the Fed fund rate. Their Fed fund rate is between 0 and 0.25%. You have a situation in which the interest rate, benchmark interest rate in the US is near 0. So the central bank is also worried about it. They want inflation rate to increase, okay, so that the economy,
their scenario is never same with ours.
It's different. It's the opposite.
It's the opposite.
Here we
so
have,
it's not a cause for alarm. It's not anything to be concerned about.
No, because it's not yet up to 2%. Here, as I mentioned, inflation rate is well above our target. Central bank has a target of 9 maximum, and it's over 18%. So it is a worry, a cause of concern for us.
Okay, Prof, before I let you go, what, in your words, is the solution to getting to that point where we have a single-digit inflation figure?
Yes, the thing is inflation management is something that is within the purview, ordinarily should be within the purview of the central bank. So we should be addressing the monetary authorities. But again, unfortunately, the inflation situation in the country has been known to be caused by non-monetary factors. The factors I've mentioned are non-monetary, so a lot, depends on what the fiscal authorities do. What should we do? We should continue to handle this issue of insecurity. Farmer sellers classes, very, very critical, and that's why I would advise the federal government to listen to what the southern governors have said. They've taken a position, and which I align with. They're saying we should find a way of stopping this open grazing. This movement.
Provide incentives.
Yes, provide incentives.
Basic incentives.
Yes, ranching, for example. I think they have suggested that. So if you can take those suggestions of the southern governors and some other governors, including the governor of Kano State, Ganduje, I am sure a solution will be found to the issue of farmer sellers classes, and that will go a long way to help improve output. The other issues, of course, have to do with transport infrastructure. Very critical.
Which are ongoing.
The government is talking about borrowing. Borrowing money to put in transport, to put in infrastructure. I support any measure, that is geared towards
boosting the infrastructure, bridging the deficit that we have.
Yes, absolutely.
Well, thank you very much, Professor Uche Owaleke, for giving us insights on the way forward.
My pleasure, Benny.
Thank you.
Thank you.
Well, moving on, Business Express continues after this break.
Nersal Microfinance Bank wishes to inform the general public not to give money to anybody disguising as its staff or agent to secure the COVID-19 Targeted Credit Facility or AGS MEIS loan. However, a training fee is charged by Accredited Entrepreneurship Development Training Institute, EDIs, for the training and business plan for the AGS MEIS loan. Whenever you are in doubt, please call us at 0901 002 6905. If anyone has collected money to help you get the loan, please lodge a complaint on our whistleblowing portal by sending us an email on whistleblower@nmfb.com.ng. Nersal Microfinance Bank also wishes to inform the general public that the COVID-19 Targeted Credit Facility disbursed by our bank is a loan and beneficiaries must pay back with interest. The COVID-19 Targeted Credit Facility should not be misconstrued as a grant from the government. Call 094-621-730 or visit www.nmfb.com.ng for more information.
Welcome back, and if you're just joining us, the program is Business Express, and we continue by telling you that President Muhammadu Buhari has commended the successful transition of the capital market into an era of increased competitive value creation for all stakeholders. At the virtual launch of the Nigeria Exchange Group campaign, The Stock Africa is Made Of, the president described the successful demutualization of the then NSE as a national pride and a step to better economic growth.
The administration will continue to listen, engage, and collaborate with the private sector with a view to improving lives and transforming our nation.
I believe that demutualization will help facilitate enough capital to support federal government initiatives and infrastructure projects.
We'll complement the banking sector as a source of funding for business activities within the country by providing a wide range of services, including listing and trading securities, licensing, market data solutions, ancillary technology, regulation, real estate, and more.
President Yemi Osinbajo has observed that while investment in fossils are being sustained in wealthier countries, banning gas investment in developing nations raises questions around equity, justice and inclusion as the global community approaches the net zero emission target of 2050.
However, pathways to reaching net zero by 2050 have to include first ending energy poverty by 2030. If energy access issues are left unaddressed, we'll continue to see growing energy demand being addressed with high polluting and deforesting fuels such as diesel, kerosene, and firewood. And as a result, efforts aimed to advance climate goals must first and foremost create carbon space for growing economies that have historically made negligible contributions to global emissions and have an obligation to their people to provide access to energy for electricity, for cooking and productive uses.
For a second day on Wednesday on the potential of Iranian supply returning, and as investors sold to speculation that inflation fears might lead the U.S. Federal Reserve to raise interest rates, which could limit economic growth. U.S. West Texas Intermediate crude futures dropped 73 cents to $64.76 a barrel, following a 1.2% fall on Tuesday. Brent crude futures also fell 73 cents to $67.98 a barrel after dropping 1.1% on Tuesday. Moving on, Australia falls 2% as Asia Pacific stocks mostly slip. Bosede Abel brings us up to speed.
Hello and welcome to the Global Market segment. I am Bosede Abel. Investors the world over are still concerned about rising inflation in the U.S. and will be keeping a close eye on the Federal Open Market Committee as it publishes the minutes from its April meeting this Wednesday. U.S. stock futures were lower in early trade on Wednesday as selling returned to the tech sector. Nasdaq 100 dropped 0.56%. The S&P 500 depreciated 0.85%, and the Dow Jones Industrial Average also dropped 0.78%. In Asia, stocks were mixed on Wednesday, with some markets in the region closed for national holidays. Mainland Chinese stocks closed mixed, with the Shanghai Composite depreciating 0.51%. The Nikkei dropped 1.28%, while the Hang Seng Index appreciated by 1.42%. European stocks are following the same sentiment with their counterparts in other continents this Wednesday as a result of the global dip on Tuesday, with most stocks like the DAX, FTSE and the CAC 40 on the red. While in Africa, stocks are not left out of this trend, with most stocks posting losses. Investors are optimistic there could be a positive twist as the week progresses. That's the Global Market Review segment. I am Bosede Abel.
Thank you, Bosede. And now gold hovers near 4-month high as dollar eases. Let's take a trip to the commodities market. Next is how the Naira is exchanging for other currencies. This is where we end this edition of Business Express. Remember to keep in touch with us by sending in your comments and observations. Business Express returns tomorrow at 9:30.